Hi traders, welcome back. I have a short video that I want to walk through with you today on trades that don't work. We've all seen the win videos from all of the gurus out there. It always makes me smile and laugh a little bit. I always wonder, how many losing trades did you pass by or forget to mention or skip over before you got to this winning trade? And we always talk about the winners, but we rarely talk about the losers. So I want to walk through a trading strategy and a trading setup that we use every single week in the trading room here on a particular underlying that has honestly not worked for us all year long, and see if it's a approach or strategy that can still get us wealthy at the end of the day. Can you get rich on trades that don't work? All right, so can you get rich? Can you get wealthy on trades that go against you, that don't work, that don't have the outcome that you desired? Well, there's a couple of things that I want to share with you in this video that I think can help you in terms of getting better results. And it clearly focuses on trades that don't work. So the question again is, can you get rich on trades that don't work? And was an interesting conversation that we had in our live trading room last week with one of our members who basically said, you know, it's interesting that you can be right on trades and lose money. Now, that's especially true with options, right? When you get into theta erosion or the passage of time affecting your options and vega, increasing or decreasing the value of your options, there, of course, are many situations where you can be right directionally on a trade. Maybe you thought something was going up, maybe you thought it was going down, and it did what you thought it was going to do, but you still ended up losing money. But I think what's maybe even more interesting is that you can be wrong and still make money. Now, most of our trades in our live trading room, not all of them, but most of them are the credit type of trades. There's various setups that you can use. Doesn't have to be a credit spread. There's a lot of ways to approach these, but the idea is that you just need to hit the broad side of the barn rather than hit a bullseye. So we have many of our trades that we're wrong on, but you can still end up making money. And so we really get down to the nitty-gritty of, it's really about your approach that you use as a trader rather than what you trade. People are always looking for the diamond in the rough. If a trade doesn't work, it's because you probably picked the wrong underlying. You picked the wrong ticker symbol, right? And our approach is a little different than that. We say that it's more important how you trade that underlying than necessarily what it is that you're trading. Now, we don't want to just nilly-willy pick any ticker symbol out there and go trade it, but it's not really about what you trade so much in terms of your results, your failures, your successes, so much as how you trade that. And it really boils down to your approach. Now, we talk a lot about money management, and money management comprises position sizing, which is how much of your overall portfolio, percentage-wise, you would be willing to commit to one strategy, one individual setup. And then scaling on top of that is, okay, how would you now take that money and put it to work in that trade? These are really the keys that we believe are the key to our success. Now, one of the big delineations, one of the big differences, one of the things that we're known for in our live trading room is our dynamic approach to trading. We basically approach trades as though we're idiots. One of our mantras is that we always hope that we're right, but we always expect to be wrong. We always expect a trade to go to a max loss against us. We do our best that we can with our research and putting a trade together. We hope for the best. We expect the worst. We always expect the worst. And we go into a trade with that idea in mind so that we can have the ability to scale that trade appropriately over time and move trades that don't work for us back into the profit zone. So I know that when you get online and you look at YouTube and you look at all these places and you're looking for the holy grail of trading strategies, you're looking for, the quote unquote best trade out there. Man, they all look great. Everybody that puts a trading idea out there makes it look like it is the best thing since sliced bread. And you have to always question, well, is that real or is that not? Well, the thing that I always point to with our dynamic approach to trading versus what most traders do, which is a simple static approach using a stop loss, trading a binary setup. It's a setup that either works or doesn't. If it works, you make money. If it doesn't, you have a stop loss, get you out at a predetermined loss level, right? We don't use that approach. We use a dynamic approach, and we scale our buying power, our position size in slowly over time. One of the things that we know now, having done this in our live trading room with years and years and years of data, it has stood the ultimate test, which is the test of time. If someone can show you years and years and years of history on a particular strategy or setup, again, it doesn't give you any guarantees because there's no guarantees in the marketplace, but it sure means a lot more to me when I can see years and years of data on a particular approach versus someone that is just theoretically saying, hey, this looks good, or maybe I've back tested this with some software, but I have no real world data to look at. So how do we do this dynamic approach? Well, again, for us, position sizing and scaling are the keys, and it's all comes down to money management. So we don't use rules that are necessarily that different from everyone else. For our position sizing, we generally don't want to put about more than 10% of our portfolio into any one particular setup or strategy. That's flexible. I have some that are as high as 16, 17%. I have some that are 1 or 2%. But we're trying to target about 10%, no more than 10% of our ultimate buying power into any one position. And then the real key to that is the scaling. So I have a model portfolio that I use inside of our live trading room, which is about $100,000 of capital. That means that generally I don't want to put more than about $10,000 to work in any one position. And the real key then is to say, okay, that $10,000 that I have allocated to that trade, how do I fold that into the trade? How do I scale that in? Do I put all $10,000 up front? We have some trades, some strategies and setups that we use where we put all of our buying power in up front. Most of them we scale in slowly at a time. Our zero DTEs, for example, we scale in 1/10 at a time. Most of our other trades we scale in 1/3 at a time. And you'll see, I think, here in just a moment, how powerful that is, how important that is. Okay, when we talk about this idea of potentially getting rich on your trades that don't work. Trades that work, yeah, we get it. You're making money. That's wonderful. What about the trades that don't work? Well, one of the strategies that we use, and I will just backtrack for a second here and say that it's important, I think, as a trader to have a business plan, to wake up every Monday morning and say, okay, today's Monday. I know what we're trading today. Today's Wednesday. Today's Friday. I know what I'm trading on these days. We have a set business plan. We have earnings trades and we have onesie, twosie trades that will pop up here and there throughout the week. But we start our trading week on Sunday evening with a Theta Fairy. We know what we're doing week in and week out, day by day by day. I think it's important in any business, and we treat this as a business, to have a business model, to have a business plan of action. Part of that is our weekly credit strangles. Now, this video isn't designed to really teach you the merits and the pros and the cons of a credit strangle setup or strategy. We have other videos for that. But my point here is that one of the trades that we do consistently every single solitary week, we have 4 to 5 different underlyings that we trade a weekly credit strangle on, okay? One of those happens to be PayPal, PYPL. And so this is a trade that we've been having trouble with all year long. It's been a challenge for us all year long. It has been a trade that has, quote unquote, not worked for us, okay? This isn't a trade that we hit it out of the park, that it did exactly everything that we wanted it to do. It's a trade that's done everything that we didn't want it to do. And I want to show you those results and how you can, again, focus on the approach rather than the underlying, and how that's so critical to your ultimate success. So with our weekly credit strangles on PayPal, again, we do this every single week on 4 or 5 underlines. We use bonds and other things to do this on. But with the PayPal example, we're looking for about a gross profit potential of 2% a week. Now, that'd be about 8% a month, be about 98% or almost 100% a year rate of return potential. That would obviously be amazing. 100% a year is a pretty good rate of return. If you're not familiar with rates of return, most of our members would be thrilled with something like that. But of course, remember, that's best case scenario, right? So that's assuming a couple of things. Number one, it's assuming that every single solitary week of the year is a profitable week. Yeah, that's probably not a fair assumption. And then it's also assuming that not only is every week a profitable week, but you're getting max profits, right? You're getting 100% capture rates on your profits. And that's certainly not a realistic target as well, though. So we have a target on this trade of about 100% a year gross rate of return, but we know that it's probably not going to hit that number. And so regardless, no matter how much lower it is than that, it still sounds like a great setup, right? It still sounds like a great approach. Of course, until everything goes wrong with the trade. And so this is, again, what I wanted to show you here today. Not a trade that we're making millions of dollars on that hit exactly as we thought it was going to hit, but a trade that has done everything that we didn't want it to do. This is a trade that we would view as a failed trade that hasn't worked for us, but yet we can still, I think you'll see, build some pretty good wealth with this strategy. And again, it's how we deploy the strategy more than anything. So weekly credit strangles, I'll jump in and we'll show you one here in our live account here in just a second. But the idea behind a weekly credit strangle is that you trade on a underlying that is relatively stable, that doesn't move around. You can look at PayPal and it has been anything but that. It has absolutely been anything but that. This is a stock that was just up not that long ago here at almost $300 a share. Where's my drawing pen right here? Almost $300 a share right in here, and dropped all the way down to almost $50 a share. A massive, massive move. We were trading it in this period of time too, but I want to show you this year's results with regards to this huge, massive move. So generally speaking, when you're using a setup, which we use here as a credit strangle, and the idea is for the underlying to stay stable and not move, and you have an underlying that drops from $300 a share to $50, you're probably going to assume that your results went out the window, right? That it was not a very successful result. Well, let's go ahead and take a look at the data. Let's look at some of the information inside of our live brokerage account. Okay, so here's our model portfolio. And for those of you that aren't familiar with our live trading room, I set up about $100,000 model portfolio with real cash. We trade it live in real time. With us as a group on both a Discord server where we can chat and talk with each other, as well as a live Zoom feed. And these positions right here all comprise our portfolio, our model portfolio right now. There's our PayPal position right there. You can see that we've got a credit strangle working right now on the trade. That's what we've got going right now, is this particular setup right here. But I wanted to show you some numbers on this trade. So let's go back here and let's calculate. Let's go back to our table and let's say that we were going to put on a normal trade here. So we generally would go out 1 week in time. That would be our June 30th. As I do this trade right now, it's Saturday, June the 24th. So we would be going out to the Friday expiration, June 30th. And we would pick some strangles on here, something around the 72 strike price. This is just out around the 2 standard deviation move. It's outside of the expected move here. And on the put side, we would probably come in right around here at the 62 level. Okay. Now, again, I'm allocating usually about 1/10 of my portfolio to each one of these positions. I have a $100,000 model portfolio. That's about $10,000. And we generally like to start with about 1/3 of that amount of capital. So if I did, say, maybe 3 of these contracts here, that would put me very close. That'd be about $2,400, $2,500 that I would be putting into the trade, and it would generate about $63 of income on the trade. And so if you look at the numbers on this, let's just look at the numbers here real quickly if we can. Okay, let's pull up a calculator here. You can see the numbers on the trade. I'm looking at about, again, $2,500, $2,490 into the trade. It would be about $60 of income in on the trade. So $60 of income for the week divided by 2490 would give us about 2.4% return for the week. So that's right at the target that we're shooting for, 2% a week. It's actually a little bit better than that. Obviously, you times that by 52 weeks in the year. That's 125% a year APR. So, you know, I feel like our projections are fairly conservative in there. We're saying, okay, we know that not every single one of these weeks is going to work, and we know that certainly not all of our captures, our take profits, are going to be full profits. So if we back that down by 25% return, you know, we're shooting for a 100% a year rate of return. Now, you can see that the trade that we have on right now here, I've got about $5,300 committed to our PayPal trade right here. And if we look at our activity for the year, I'll give you some numbers here that we can look at. Let's make sure all these are showing. Yeah. So here's all of our transactions year to date on the PayPal trade. Now, a couple of numbers that are important to keep in mind. We have on average this year had about $3,800 of buying power attributed to this trade. Okay. We are big on scaling. We start with, again, a 10% access to our overall portfolio. For me, that's $10,000. So I set aside $10,000 for this trade, and it ebbs and flows. It goes anywhere from 1 to 2,000 committed up to maybe 6, 7, 8, 9,000. I've never really gotten fully committed on my buying power to this trade, but our average weighted buying power into this trade has been $3,800 for this year. You see our fees and commissions there of about $200. That means we're up about $1,000, $1,047 basically for year to date. Let's say $1,000. Let's say just $1,000. Let's round it down. Let's be conservative. Say we brought in about $1,000. Okay, so about $1,000 on the trade. So we say let's say about $1,000 on the trade divided by our average buying power into the trade of 3,800. We're about halfway through the year. This is about a 26% rate of return that we have experienced halfway through the year. Obviously, if you times that by 2, we're looking at about a 52%. Let's round that down a little bit. Let's say that we're on target this year for 50% rate of return. What does that look like in terms of rates of return dollar-wise in our pockets? Well, let's take a look at 50% a year and see what it would look like on our average balance in that trade. So right now, about $3,800. That's our average weighted committed capital to this trade over 10 years at 50% annualized rate of return, just compounding it once a year. That's almost $250,000. That's almost $250,000 in your pocket over a 10-year period of time. And remember that this trade is just one of about 25 that we have going on simultaneously inside of the live trading room. It is essentially a $2,000 a year annualized income on a $3,800 average weighted investment. It's not a bad rate of return for a failed trade. Again, this is not our trade that we're touting as our most successful trade this year. This is one of our trades that has not worked for us. And again, it's because of the dynamic way that we approach that, the dynamic way that we scale that. I think that those are rates of return that most people would be impressed with. So I just wanted to share with you again, it's not about whether trades are right or wrong. It's about how you approach those trades that really matters more than anything else. If you'd like to see all of our trades and how we trade and some of the strategies and setups that we use, we'd love to have you come on board with us and give it a try. You can go to tradelivewithus.com. I do believe we have the highest value online trading group anywhere on the internet today. I'm pretty sure you're going to see trading strategies, styles, setups, and results that you've not witnessed before. Setups that are probably new to you, And that's what most people are looking for, is something that can expand their ability as a trader. If you're stuck in a 0 DTE only trading room, it's time to probably move from being a gambler to being an investor and focusing on more robust strategies that can actually build thousands of dollars of profit rather than just gambling with little butterflies or whatever it is that you're using in your 0 DTE trading room. We of course trade 0 DTEs as well, but I think you'll find some impressive strategies here. We have one of the, I think, best ironclad guarantees online today. If you jump into our live trading room, you go through the 4 hours of training that I give you. You and I go together on a one-on-one Zoom, build out a strategy session for you. You do your daily check-ins with me, and you get to the end of the month and you're not just absolutely blown away with what we offer and what we do. I will give you, no questions asked, 200% return on your investment. Your first month's subscription, I'll give you twice that back. No questions asked. So come on board with this. Check it out. I think you're going to find some strategies that are unique and special. Everybody, for example, is talking right now about our Theta Ferry. That's put an average of $20,000 a year, just that one trade alone, into our traders' pockets overnight as we sleep. No guarantees, of course. You understand the disclaimers that come with trading in the marketplace. But if you want to up your trading game, I think you'll find the way to do that is here with us in this trading room. Love to have you come on board. Let me know if you have any questions, of course. Here to help you guys.